Thermotex's lumber in Wilmer or Spicer to lock in your Thermotech savings today. Quality at work for you.
The following segment is a paid commercial program by Heritage Bank, member FDIC. It's time for Ask the Expert on News Talk 1340 and 96.3 FM, KWLM.
Thanks for joining us for the program once again today. Let's chat with Doug Frazzini from Heritage Bank. He is a capital markets specialist. From there, first, before we kind of get into the nuts and bolts and the business end of this interview, tell us about yourself first a little bit, Doug. Do you live here locally?
Yes, I live in the Minneapolis area. I joined Heritage in May of 2024, so about a year now. Mm-hmm. Been in the real estate finance industry I hit 40 years this year. So
oh, wow.
Have a little background.
Yeah, that's right. You know a couple of things. Honestly, I don't know what a capital market specialist does. Can you enlighten us a bit?
So my role here at Heritage is to work with investors to make sure that we have a full suite of mortgage products, competitively priced mortgage products for home buying and for refinancing. So first-time home buyers all the way to what we call the jumbo loan, which is above an $806,000 loan amount.
Okay. You call that a jumbo. Are there other names for other size loans? I didn't know there was a special name for that.
Well, everybody's probably heard of Fannie Mae and Freddie Mac, and they are the two agencies that kind of support the loan amounts from zero up to the $806,500 level. That's reset every year based on the median home price throughout the U.S. So there are rate differences and some qualifying differences between what they call a conforming loan and then the jumbo loans.
I see. And varying rates and so forth, that's kind of your job to track those mortgage rates and keep track of the housing market a little bit then, right?
That is correct, yep.
So where are we with mortgage rates right now? I know, hold on a minute, it might change. It's kind of been like that, but what are we looking at right now? I know it's kind of volatile times we're in.
It's very volatile, and watching screens is, watching the bond markets and the equity or stock markets has been dizzying here. The primary driver right now is just uncertainty around how tariffs are going to affect the prices for everything that we buy here, food, certainly energy, our gas prices, and just goods and services. So we are kind of in a period of chaos until we kind of settle in and see where the tariffs are actually going to land. And if there's some negotiations that can reduce or maybe eliminate them. So that's inflation is one of our biggest concerns with interest rates, and it has been over the last 2 years now, and that's what the Federal Reserve is trying to manage, right?
Right.
So
are they trying to get that? Are you seeing? Well, let's go best case scenario out of all these tariffs. We could really see a reduction in interest rates, couldn't we?
Ultimately, that would be the end goal. The goal of tariffs is to try to bring the trade imbalances back in line so that, it's fair trade with all the countries that we sell products to and that we buy products from. If prices stay high for too long, there's a fear that we could have a recession, which would most definitely not help interest rates. So, that's the Federal Reserve. As we hear a lot of press coverage about them raising or lowering interest rates, they don't have very many tools in the toolbox to combat the issues that tariffs bring up. So, but what we have seen is there was probably 100% chance that the Fed would reduce their interest rate, the benchmark rate in June, and that's virtually gone to zero now because of the uncertainty around tariffs. So
what are you seeing then? Are you still getting home buyers coming in? I mean, are you getting requests for mortgage loans right now?
Absolutely. What tends to happen, obviously, people still need to buy houses. People are taking new jobs, getting transferred. So there's always, home buyers in the market. What tends to drop off is refinancing. Refinancing is very rate sensitive. In 2020 and 21, we had rates that got down below 3%. So that was in reaction to obviously a bad time economically, but it's locked a lot of people into very low rates. So refinancing activity is much lower. But home buyers are still out there, and we all need shelter, and so interest rates, while they're important, they're not the only driver of home purchasing.
What are some of the other drivers for home purchasing? Again,
shelter is the key issue, and if you have growing families, you need larger space. Again, job changes, somebody taking on a new job and having to move to a different state. Those are all reasons why people will buy and need to buy, and regardless of what rates are doing.
So, I mean, people are coming in. They probably have more questions right now for you than maybe they've had a long time in the past before us. What's the rate? All right, let's get the paperwork started. What are some of the things that people are talking about as they come in to get a home mortgage?
Well, and one of the things that we at Heritage Bank, and I'm guessing people have heard a lot about, getting pre-approved. Mm-hmm. And we strongly recommend that before you go out and start shopping. It gives you the confidence to know that the price ranges that you're looking at are within your budget and that you can qualify for them. So that's the point where you really can talk to one of our trusted advisors, go through your budgets, your debt, and really understand, how much house you can afford. We can qualify you for X amount of dollars, but if you're not comfortable with that payment, that's where you should try to make your decision. So starting out and getting pre-approved before you jump into the housing market is strongly recommended.
Yeah, that helps a lot, and your mortgage banker will help you understand what you can afford in a home in a reasonable amount. You don't want to put people in a house where they're house poor, is the old saying. You want to make sure they get it priced right for them.
Absolutely. And, there's a lot of talk about rates are high, or higher. Obviously, we've gotten spoiled with rates in, obviously below 3%, but even rates in the 5s are not typical. Mm-hmm. So, that's not always a driver of your decision. If you're waiting for the perfect time to buy, and that you wait a year or 2 years, that's a year or two of equity that you're not building and paying somebody else's mortgage and building their equity. So, again, it's the right time to buy is when you're ready and when it works for you and your family.
You mentioned that refinancing requests or interest maybe goes down during times like this. Are you still getting some refinance? Are there other reasons to refinance a loan rather than just trying to lower your rate?
Absolutely, and we have seen, because of the housing shortage across this country, and low supply of new listings, people are staying put. So but along with that, the home prices have stayed high, and there's a lot of equity that's been built. So somebody that's in a home that has $100,000 or $150,000 worth of equity, but also has carried heavier credit card debt or unsecured debt, that's a good reason to take a look at a refinance to consolidate some of that debt. Mm-hmm. The other reason would be if you have a low first-rate mortgage, with higher rates and higher prices, if you've got equity in your home, you might look at doing a cash-out refinance, take some of that equity and remodel or add on, make your space bigger. So those are more of the kind of refinance requests we're looking at now versus just trying to reduce the interest rate.
And when people refinance their mortgage, is it just for equity? I mean, how much of the value of the property is somebody allowed to refinance?
It just depends on where their current mortgage is at. There are some restrictions on what they call a cash-out refinance. So it'll really be driven by doing an appraisal on the home to see what the current value is at, and then where you're at in relation to the current mortgage you have. So there's limitations from that equity perspective on how much cash you can take out of a home.
Mm-hmm. You guys have relationships with realtors. It's kind of, you guys work hand in glove with what you do quite a bit. And you have realtors sending you folks to get pre-approved for loans and so forth. What are they telling you on the street? How are the realtors doing? Are they still, optimistic about what's coming, or are they in that uncertain point as well?
Well, I think everybody's feeling the uncertainty. Recession certainly doesn't help anyone, from the real estate side to real estate finance. So everyone's feeling the uncertainty. Realtors are dealing with the same issues that we are, and that there's just a lack of available supply. Prices have remained higher, and so first-time home buyers are looking at starter homes that are north of $400,000. And so it's made it difficult for people to qualify. And because there's less supply on the market, you have more competition. So that's also driving prices up. And you've still have situations where a house that's, in that $400,000 to $600,000 price range might have multiple, 5, 6, 7 offers on the table within a day of listing. So that's really kind of affecting the ability of the first-time home buyer to compete.
Are there specific products just for that first-time home buyer?
Yep, there's both Fannie Mae and Freddie Mac have low down payment first mortgages that require as little as 3% down, and then depending on income levels, there are state programs that offer down payment assistance. So it's that old model of needing 10 or 20% down in order to buy a house is not true anymore.
What are some common misconceptions that you deal with that a client comes in with and they say something, you go, that's not really how it is. What do you hear that isn't quite accurate?
Well, I think the news media tends to be lagging a little bit, and when they report things, so we might have a day in the market where rates have come down. Let's say rates drop to 6.25%. By the time that gets published in the media 3 days later, rates might have gone right back up. So that's it's good to constantly check with your mortgage banker to see where rates are on a given day. The other misconception that I think that a lot of people hold is that when the Federal Reserve lowers the federal funds rate by 0.25%, that automatically transfers into mortgage rates going down by 0.25%. And that is not the case. The Federal Reserve is lowering the interest rate on the shortest term financing. So I think a lot of people hear that the Fed dropped the rates 0.25%. My mortgage rate should go down 0.25%.
Doug, thanks for joining us this morning. Just give us a quick recap for those that are nervous about the market but need a home, so they are planning on getting a loan. They should come and see you.
I think, the first step would be to set up an appointment with one of our mortgage loan officers, like Chris Vra there in the Wilmer area, and really get a handle on your budget, your finances, and let us give you some options to show you how much home you can afford.
Terrific. Have a great day, Doug.
Thank you.
Doug Frazzini, Capital Markets Specialist with Heritage Bank. HeritageBankNA.com.